Hello, everybody. I'll Go Cowboy here, and we have a special treat today. My internet was out. I was unable to do a live free session, free beginner session on YouTube like I do every weekday. However, the internet came back just in time to do our private session. So I'm going to go ahead and release just a little bit of what our private group pays to see. There are a lot of information in there that I cannot share, but what I'm about to share is something I'm okay to share. It's just some pretty quick look at candle theory, and it was at a decent point in the program to where we can just have a little sneak peek at what goes on. All right, so enjoy the show and stick around after the clip to get some further information on Algo Factory, what we do, and how to find us. Thank you. I'll make this clear. Okay. This candle that I'm going to outline right here, it's called the high test candle, shooting star, whatever that might be. Okay. So to illustrate that, you have price entering. Let me recreate this candle. Okay, so price entered the candle like this. Actually needs to be more dramatic, like that. That looks a little closer to reality. Okay, so price entered here, right? Because we know this to be a bearish candle. So I'm trying to see here. Right. Actually, this is a bullish candle, this particular candle. So, because you look at the prior candle, I'll go ahead and draw the prior candle because that's going to help out. Prior candle looks like that. And next candle looks like this. Okay. So, price exited this. This was a bearish candle. Price exited right here on the prior candle. Okay, and then price entered right here, and then let me make this white just to differentiate between my arrows and the wick of the candle. Turn down our fun music here. Okay, so like I say, exited there, entered right there, and then at some point, price made it all the way to the top of this wick, and at some point, price made it all the way to the bottom of this wick on the bottom. But in the end, it exited here, right? So price could have gone anywhere 10 times to the top, 28 times to the bottom, doesn't matter. What matters is that at some point it was at the top of the wick, at some point it was at the bottom of the wick, and then it exited at the top of this candle. And then it entered the next candle right here. I don't think that candle has any wicks. It does. Okay, I lied. So let's go ahead and do this proper. This has a wick here and a wick like that. And this has a wick here and a smaller wick here. Okay, so that's what the actual, three candle formation looks like. Those candles right there. Okay, so as the candle exited there, right there's where that candle exited. The next candle entered right here, went at some point to the top of this wick, at some point to the bottom of that wick, and then exited here. Okay. So what the most important candle in this kind of series is going to be this middle candle, this high test candle, right? AKA a shooting star. And that long wick is going to tell you that the bulls tried to push price up and the bears crushed it back down. That's what that means. Okay, so that means that the bulls expended a lot of energy. Okay. And then the bears just crushed it right back down. And then the following candle had a lower low here and a lower close there than the prior candle, because prior candle low was right here. Prior candle close. Sorry, that was the prior candle close right there. And the prior candle low is right here. So the next candle's close is lower than the prior candle, and the next candle's low is lower than the prior candle. So when you have kind of like price moving up, okay, like this, and then you have a formation where you have this high test candle, and then the next candle has a lower close, lower low, then you can expect price to head down. Okay, so that's a question here. The candles mean more if they're at the top or bottom of a move. So if price has made like a lot of progression, maybe into like a resistance or a support, that's when candles are going to be a bit more useful. So I'm trying to find an example of how that is going to work. Give me 1 second. Like for example, okay, so you have this area of resistance from, see where that Roman numeral 3 is. That's just an indicator I'm testing. So ignore the 3, just use it as kind of a place marker. So there's a bit of resistance created right there. So price headed up into that area, rejected down. There's some more price action back here to justify that. So we know that this area is a bit of resistance. And I'll get to your question, Will. Give me just 1 moment. And then price came down, and then it actually rallied back up to retest that area. It didn't quite make it, but if you look at where this arrow is headed, what you'll see is as price headed towards that resistance, and we know price is going to want to reject there, you have a bit of a high test candle. And that blue dot right there is actually a reversal indicator. So, that's like just an extra bit of data for you to say, oh, price might go down, because that's a reversal indicator, right? And there's a million of those. You could just go onto your indicators list and type in reversal indicator and see which one you like. You got to test them out. But what you see here is you have price moving up into this resistance area, and then you have this candle that basically is a high test candle. You have the bulls trying to push up, right? And then the bears push back down. So you have the body towards the bottom of the candle. And then technically the next candle after it, this purple candle here, is a lower low and a lower close. Technically, it's by the skin of its teeth, but it is a lower low and a lower close. It might be right at the same low, but certainly the candle after that has got a lower low. So you definitely have lower low, lower close happening, and then you have a good hangman right here. So this hangman candle it's a good example. It's actually more of a dragonfly doji, but it can act as a hangman. And what that means is that it's like a bearish pointer on the way down. So price is kind of, you have this high test candle, low body, lower low, lower close, like right there, right? Bearish candle right there, lower low, lower close. In fact, so that's like, okay, you had your high test, now you got a lower low, lower close. That means that technically from a candle theory standpoint, you should expect price to head down, especially after rejecting at this resistance. But then you have this hangman, which is an extra bit of indication that price is going to head down. And the story that gets told here is that the price exited, the bears tried to push price down, the bulls pushed price back up. Now that takes energy, right? Now, here's the thing. If the bears have a lot more energy in store because the bulls used all their energy on this move up, then that on this move up here, the bulls expended a ton of energy, right? So, but they're going to, look at the size of this move. It's a big, big move. It goes back all the way to like here. You started out, you had this actual three white soldiers, really 4, if that's even a thing, right there. They call it white. I mean, it's whatever your bullish, candle color is. For me, it's purple. It's a little confusing there, but you have that, and then you are head all the way back up into this resistance right there, and then after this big move up into that resistance that was created well before this, you have what I just pointed out was this, high test, lower low, lower, close, and then you have a hangman, which is an extra bit of evidence the price is going to continue down. And again, all the energy expended by the bulls means that when they tried to push back up here, it's like somebody who just did a bunch of like heavy sets. They just maxed out. They're on the bench. They're pushing, I don't know, whatever it is, 200, 300 pounds on the bench. They're really, pushing it hard. And then they go ahead and they take a little rest, and they go, okay, I'm going to do one more. And they had already blew the crap out of their arms. And they say, I'm just going to do one more. And then they do one more, and then they really can't do anything else. They really blow out their muscles on that last max. And then the bears pretty much can just take control after that, because they've really used up all their energy. And the bears, this whole time, the bears were chilling out. They're the next, guy. They're just hanging out in the Smith rack, doing lightweight stuff, waiting for this guy to get tired out, because they're going to say, I'm going to outbench this guy, And so they're just kind of resting, drinking their Gatorade. And all of a sudden they sit down on the bench now, and they just crash down, because the guy can't hold on. Another way to look at it is a tug of war. This last tug right here by the bulls just really tired them out, and the bears can take over, and you have a nice move down. I mean, that's a great trade right there. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.